This video/stream is sponsored by Trader Central. Trader Central provides funding for traders, spot cryptocurrency exchange services, and access to trading tools like copy trade software, portfolio tracking, and a social platform exclusive for communicating with trader friends. Sign up now using the link in the description and get up to 30% off on your first plan.
Hey guys, welcome back to my channel. How are you all doing? Hope you guys have been great this past week. Sorry I haven't been able to release any analysis videos. I've been very busy this past week. But still there's still plenty of opportunities for us to capitalize on the market. In this video I want to talk about my analysis for gold for the upcoming week, and as usual I'll start up with the weekly time frame and work my way down to the 4-hour time frame. Now on the weekly time frame we can see that price has started this reversal from close to the 2000 area. So price got close to 2000 and then quickly rejected off that area all the way to the downside, and now has formed more or less this M pattern, as we can see on the weekly time frame, and it's coming all the way down. So could potentially come down to this resistance level around the 1915 area, and potentially break it as well down to the 1890, or even down to the 1875 area. So that's what we're looking at on the weekly time frame. If we change from the candlestick to lines, you can see the what is formed as well, better on this area and all the rejections. So price got to this area here, rejected off it here and here as well, and got to this resistance area and has rejected and closed below it. Now price is heading down towards this next significant resistance area, which is where I'm expecting price to get to and potentially break it as well and continue its down move. If we take this and on the weekly sample, we can see how massive this bullish candle is as well. So this is a bullish engulfing candle which has engulfed the previous bearish engulfing candle, sorry, which has engulfed the previous bullish candle. So that points more towards a bearish continuation as well. On the daily time frame we can see it as well, price getting towards this area here and quickly rejecting to the downside. And if we draw our fib levels from the swing high to the swing low here, we can see that this level rejected just close to the 61.8 Fibonacci level, or just around the 50% Fibonacci level, and then rejected and started moving to the downside from there. And also if you note the reversal candlestick pattern around there, the bullish pin bar, which is more or less a reversal pattern indicating that price would most likely continue to the downside, followed by this massive bearish candle. Then there was a range here and then another massive bearish move again, breaking through various support areas. And this is the last support area to be broken around the 1938 area. So, and as this level has broken now, I am expecting price to also continue to the downside, at least for price to get to this resistance support area around the 1915 level. Now this 1915 area here is a very, very, very key area. As you can see, price has rejected multiple times of that area, which means that this area is a very strong level and has held several times. Price has tried to break and close below it, as you can see on the daily time frame, but price has never been able to do that. Now in this case, for price to break this level, seeing how strong it's been in the past, the sort of candle that I expect to break this level will be a very strong bearish candle. So you see like a very strong bearish candle, just like this one here, or like this one, breaking through this resistance area, because once there is this support area, because once there is a strong support, You need a lot of force, so a lot of buyers coming in to actually break that area, which is what we would expect to see if this area does break. But when price gets down to this area and it doesn't, we have to be very, very careful when trading this, especially on a higher time, especially when trading on a lower time frame. Um, because I would advise that even if you're trading on the lower time frame, you need to get to the higher time frame, especially the daily time frame, for you to be able to see exactly what is happening around this area here. Okay, because something like this may happen again, where you have this price coming all the way back down here, pushing back through this area, but then again at the end of the week or at the end of the day, you realize that price has closed above this area, so giving this sort of candlestick pattern. And if we see this again here, or if price gets here and forms like a bullish engulfing candle, then most likely price would bounce from there and continue to the upside. But if there is that massive break down from this area here, then most likely price will continue all the way to this level and then potentially even all the way down to the trend line here. And when we see that massive bearish candle breaking this 1915 area, then you would expect that price would retest that area as well. It will come back to retest it definitely, and then you can also capitalize on the retest and then take your price to the downside as well. So um generally what I'm expecting is for price to continue its bearish move at least to the 1500 or to the 1915 area. So let's go to the 4-hour time frame and potentially the 1-hour time frame and see how we can capitalize on this remaining move, because that would give us about 150 pips on that move. Now, as you can see in this area here on the 4-hour time frame, we can see that what I said earlier, price got all the way down here, ranged for quite a bit, and then has broken through this, and you can see the rejection of this area from this week here and this doji candle. So there was an indecision here. Price wasn't sure if they wanted to bounce off this area or to break it, and that's why this doji candle formed. And then following this doji candle was a bearish candle, so meaning that at the end of the day, sellers were the one that won and potentially closed below that resistance support area, now non-resistant. So and that's why you have this rejection here to this side and then price coming back down there. So what I'm expecting is a continuation to the downside back into this area here. So what we can do to capitalize on this trade is we can actually enter this trade immediately to the downside. Okay, if you're not already in this trade, and just ensure that you have a proper risk management. So you put your stop loss here just above the resistance area, and your take profit can be here. Okay, and then it's not a very good risk reward ratio. So for me, I wouldn't really trade it, because I like my risk to reward ratio to be around 3:1 or 1:3 rather. So but it's not a very good risk to reward ratio, but it's still tradable, and then would expect price to get all the way down to this resistance or support area down here. Okay, personally, I'm not going to trade gold yet until gold gets to this resistance, this support area around the 1915 area, because I know that around that area here, there's going to be a massive move, either a massive bearish move or a massive bullish move around this area here. So again, like I said, if price gets down to that level, and for price to break this area, it has to be a very strong move. So there will be a very strong candle that would break it. And if a strong candle does break this move to the downside, then I would expect a retest. Okay, then enter my sell trade on the retest. If price gives me a bullish, a bearish reversal on the retest. Because if you do not get a bearish reversal on the retest, then there is no point in you taking the trade, because it could just be, again, when you go to one daily time frame, you may just see something similar to what we saw in this area here. So it could just be like a fake out, and on the daily candle you may see like a pin bar, a bullish pin bar forming, and then price continues to the upside. But if on getting to the back to this area, price gives us a bearish reversal pattern, then we can take our sell trade all the way to the downside, which for me is what I'm expecting. So and again, like I said before, price so we're expecting price to get to the downside. Now there's also that possibility of price bouncing from this area as well, um here to the upside as well, so we shouldn't forget that, and then making this area a very key area for us in the upcoming week. So this is the area that we'll be looking out for, the 1915 1920 area. And so just make sure that when you get here, be prepared for a major price reaction and be prepared to enter your trade as well. So this has been my analysis for gold for the upcoming week. I'm waiting for price to get to this major area here where we'll be expecting major price reactions. And just make sure you get prepared and ensure proper risk management when you do as well. I hope you found this video very helpful. If you have, kindly leave a like, and if you haven't subscribed, kindly subscribe to the channel for more analysis videos, and turn on your bell notification as well, because I'll be dropping a lot of analysis this coming week as well. Thank you very much for watching, and have a great week ahead. Peace.
I can't forget the day we met. Your eyes so blue, me piercing through. I can't forget the day we met. Your smile so bright.